All right, we're shaking everybody. Wall Street Jesus here. Degenerate Hangout. I haven't spoke to you guys in a bit. Lucci's been on with a couple of Steam Room members the past couple of Tuesdays. So good to see everybody back. Not a lot to talk about market-wise today. We'll talk briefly about more a little bit about strategy. We could go over some names, some underbelly names. Uh, it's just we're heading into earnings season now. Uh, as a whole, intermediate term sentiment was a little on the hot side, cooled off a little bit since this breather. But the setup is not ideal. I guess the best way to put it, it's not a let winner run type setup for me. You know what I mean? And I could be wrong by that, but just like I base everything, my whole strategy on two things. You guys know that, right? It's sweeper activity and sentiment. And the two things I look for when a rally gets extended like it has, okay, and we don't get a legitimate flush. We get days of weakness and we'll see like our short-term indicators flush out, right? The squeezometer, like what just happened yesterday, and some of the intraday indicators. But on an intermediate term basis, those things aren't going to really make a dent. And I'll give you guys an example. A lot of you guys and gals are familiar with the daily sentiment index. Okay, it's widely followed, at least amongst professionals. You guys see me post it pretty often. And going into the highs, literally into that niner day, you had the NDSI, which measures percentage bulls on NASDAQ for NASDAQ related issues, was at a high of 95%. 95% bulls on the NDSI. And when you see those type of readings, I found from my experience, you want the market to cool off. Okay, because again, sentiment's not a crystal ball. I've seen price action, extend higher through bullish extremes, and obviously we've seen it in December where we were getting, bearish extreme readings across the board, and the market still continued to sell off for a bit. So, and I think that's where retail and the riffraff, it's a good thing, but I think that's where they just, get rid of it and don't find the real edge in it, is because they're looking for exact buy sell signals. But the beauty of sentiment is what it tells us is it's on a risk reward basis is the best way to measure it. Okay, and when you see an NDSI 95% bulls, the market can extend higher, but from my experience, red flags will just continue to show even brighter at that point. And the longer you run through that type of hot sentiment over an intermediate term, and you don't cool off via consolidation, chop, or sometimes a quick hard pull over the course of a week can do the job, depending on the news around it, etc. If you don't get that, what you get is that I completely get my year screwed up. But what January of 18, right? January of 18. And if you guys remember that, here, it's on right here on this chart. Okay, that was, out of this whole bull market, probably the hottest spot sentiment was as far as bullish extreme. Okay, and I remember like right around here is where a lot of that, all the intermediate term indicators, including the daily sentiment index, were just absolutely cooked, fried. Okay, and the market still had a good week and a half, 2 weeks of just straight up after that. Okay, but you see what followed after the music finally stopped. Okay, so from my experience, the longer a market continues higher through that extreme sentiment, the more riffraff they reel in, the bigger the risk of a larger pull or a more vicious pull when it finally shows up. All right. And listen, some of you guys out there may think you're quick enough to wiggle around and avoid getting caught in something like this. But the more prudent approach is to be prepared for it ahead of time. All right. So my point why I bring that up is we weren't quite there into the highs here, but we were pretty hot. And we were talking about it on the webinar, the members only webinar. It was just a perfect spot for at the least some sort of breather here. Okay. And it looks like we're starting to get that. If you look at like IWM, which has been the leader for a good portion of this rally from the lows, right? A good measure of risk on. You can see what kind of environment it's heading into, right? Consolidation, downward tilt, lower highs. So possibly that could be an indication of what we're heading into as far as the S&P and the Qs are concerned. All right, and keep in mind the NASDAQ was the hottest of the bunch going into this recent high, and for good reason, right? You see software stocks going ballistic, old tech, the Oracles, the Ciscos. That's where all the money's been flowing into of late. So the point of this whole conversation is if we do cool off, okay, and if we do head into something like this here, that is a best case scenario. I really do believe it's a best case scenario because ultimately what it's going to do, it's going to set up a whole new batch of initial activity. It's going to set up a whole new sweet spot as far as entries are concerned. Okay, because the top action of this rally, when you can't look at these things anymore because they're up every single freaking day, the time has come for something like that. Okay, not every chart looks like this, but the new leaders, right? We were talking about that off the lows of the market. New leadership and software has been one of the strong spots out there, and these names have exploded to the upside. So maybe it is time for them to finally chill at some point, maybe off earnings into earnings. We'll see what happens. All right. So there's not much for me to talk about as far as what we usually talk about. What's catching the sweeper activity, what sector rotation, and there's other things at play too. There are other major factors at play. One, we're going into another earnings season. Feels like it never leaves us, right? 24/7, 365. Feels like we're in earnings every single damn day. But we on the doorstep now. We got the heart of earnings season coming. The banks in about a week, right? They're going to start things off. Some of the home builders are getting ready to announce here. Okay, so it's a good time for, like Ani and I were discussing before we hit the record button here, to just take a more conservative approach. All right, and for me, for each and every one of us, it could be a different thing. For me, it's this simple. Okay, when this is my outlook on things as far as sentiment is concerned. And here's the scoop on sweeper activity. Don't think I just threw that to the side because of sentiment. But when sentiment gets cooked, what happens is there's a lack of initial buying, initial sweeper activity. Okay, and you guys hear me talk about that ad nauseum, but there's a reason for it. It's so important. It's so important, at least in my eyes. Okay, and in simple English, what I mean by initial activity, when ZS, okay, catches that initial bull missile, right, that Drunken Miller December opening bet, that's initial activity. Okay, that's when the first time Sharpie's eyeballs are on a name, okay, within the current rally. So now, like ZS caught another couple of sweeps today. There's no way we can treat both those rounds of action, today's action and that initial December sweep, which feels like a long time ago now, the same way. All right. And that's why you see a lot of us get excited when we find an under the radar and under the hood name like a service monkey, catch some initial sweeper activity. It's not because somebody dumped in $5 million worth of upside call buying and service monkey. It was the first time sweepers' eyeballs were put on a name. All right. And there's been less and less of that. And just for the simple reason of the rally has gotten extended a little bit. And not just that, there's been a lack of rotation into other groups. Okay. They could very easily rotate into underhood or underbelly material names or commodity names or energy names. There's a gazillion energy names out there. I'm talking about underbelly, not the leaders everybody knows about. But for some reason, and I'm sure they have their reasons, and we don't really care about them, right? Because we take the approach they know a lot more than we do. They're not as excited. They're not being nearly as aggressive as they've been in some spots of tech and other things that we've seen done well throughout this rally. All right, but when you reach that point and you finally notice there's a lack of initial call activity out there, that's usually a good sign for me, along with the sentiment, right? The two are lining up together for me to change my approach. All right, so, and my approach, again, I'm not trying to push my way on anybody. You guys know that, but you can take away, you can take little tidbits out of my approach in what my game plan and outlook, right, and what I'm trying to accomplish is, and apply it to your strategy. All right, and my approach is pretty simple. I am looking to buy off weakness when I have short-term sentiment on my side. Okay, so in simple English, we just saw it yesterday. Okay, yesterday I'm sitting around all day, or the day prior, Friday off the weakness. Okay, so basically our short-term indicators went from hot, meaning too many bulls out there on the call side on a short-term basis, okay, to now coming off Friday sell-off, bears were starting to get a little excited on the put side, okay? So any call sweeper activity that I take a liking to into weakness where I think I can get that snapback rally bounce, okay, that's where I'm looking to fire for a trade. You know what I mean? There's a big difference here. For a trade, okay? So I'm not looking to buy calls in XYZ 6 months out. All right? I don't have an interest in that because that's not my philosophy right now. That's not my strategy, my game plan. So I'm looking for action in short-dated stuff where sweepers could be looking for a move over the short term. All right, and case in point, a couple names I mentioned, the Tesla was one. Okay, and it really doesn't matter. And here's what I want to stress, okay? Like Tesla by far was the most aggressive activity yesterday. In my opinion, probably the only real activity, decent size out there as far as buying was concerned. All right, but there was also sweeper activity, on a smaller scale in several other names. And if you think you can get a bigger buck as far as a snapback rally in those names, okay, and that's all you're looking for, you don't necessarily just have to buy Tesla, if you don't agree with the spot or whatever reason. You can buy any other name that catches action playing for a snapback. You could play just the market itself. We talk about that all the time, right? ES, SPY calls, SPX calls. All right, but for me, the only thing I need to see is some buying into that weakness. Why? Because it tells me at least the smarter money out there is playing for some sort of snapback. Okay, so in other words, I'll give you a scenario where things might have been different yesterday. yes, let's say, for example, there's just no call sweeper activity, right? We just went through a lengthy period of that, months, where there would be days into weakness where put sweepers would just grab the ball and call buyers were nowhere to be found. Okay. I very rarely would make a play just off sentiment for a snapback without any sweeper activity. All right. Because what that tells me is maybe there's, a little more weakness to come. All right. So until I see some buying come in, that is my green light to play for that snapback. All right. And yesterday, for example, if you remember what went on yesterday, we had the initial sell-off, right? The flush in the morning. We saw some put activity, nothing major, but momentum players playing in weeklies and all that stuff as the market was pushing lower. And then there was a nice little wave of call buying that came in, which set up, an intraday squeeze and gave you the opportunity to look for a swing name if you were interested for a snapback. All right. So, and as opposed to that, okay, and here's the most important part of my approach. On a day like today, I didn't play anything. Okay. We had a nice gap up, right? Nice snapback. I didn't get long a thing today. I'm talking about, forget about swing trade, because that wasn't even on my mind today. I didn't even day trade anything. All right. Because my focus was to try to loosen up some things I may be green on into strength, right? Keep the powder dry. And I'll tell you why that works. It doesn't have to necessarily be a full-fledged correction for that approach to work, okay? Because if we do end up in something like this, the way the bears are wired these days, it's hard to believe that they're just going to give them some easy money. And you know what I'm talking about. So they'll give them a couple of red days. And just when the bears go all in, right? Just when they're getting excited on the put side, or they want to let winners run because they think there's more downside, they squeeze the living piss out of them. All right. So as ugly as IWM has looked at times, take a step back and look. And I think this is where I look at charts. You guys know I'm not a technician, but it just tells me a story of what has happened. Right. And if you pull up an IWM daily, you can see clearly weakness selling, and you can see right here probably is where bears are thinking things are ready to unravel. Then you get this reversal day here and a nice tactical trade opportunity on the long side. All right. Then you get something similar here. And today you get that squeeze. All right. So even if we're in something like this, which could just be some healthy consolidation to wash out some of the bullish sentiment, we still have those trade opportunities in the meantime. And the same thing if you're looking at day trade. I know you guys get sick of it, but weakness is our opportunity on the long side, okay, when sentiment's on our side. All right, if you want to get clever enough, intraday, there's some shorts too. You don't hear me talk about that much, but like a day like today, you could almost feel it. I'm not going to go and short it, but you can almost feel on an intraday basis, I'm talking, okay, the lack of call activity out there, the gap up, where sentiment's been, where the squeezometer was at 65 in the morning, there would at least be a window for a short on an intraday basis. I think when you're looking for more than that, that's where you can get into some real trouble on the short side because they don't make it easy. So that's, in a nutshell, that's where I want to be right now. Okay. And I feel totally comfortable with that and content with that. As we head into earnings season, that's a whole other wrench that gets thrown into the equation here, right? We all know how flow looks when we're lined up bullish, how messy flow can get going into earnings season. You can't trust a lot. Like today, we saw like a lot of individual call buyers. Like in other words, one order blocks. Forget about blocks. We don't even look at them anymore. But even sweeps. Like I give an example. There was a late day weekly sweeper in Zillow Z. Okay, and like for me, this is a great spot right here. Right, niner off a nice fade from this move. Right, and that weekly sweeper is my heads up that this thing is ready to break this pattern. Okay, the problem in earnings season is when you have one sweep like that, it's not huge size, and you got KB Homes, Lennar, all reporting. How do I know the legitimacy of that order? Like we never know, right? But now I have even less confidence because there's a catalyst for even a short to hedge his bet. So that's the problem with earnings season. So for me to really be interested in like a Zillow here into earnings season, if taking the approach I'm taking right now, which is a little more conservative, I would need to see that Tesla-like buying come into the Zillow. Right? The survey monkey type buying. Again, it's not even about the size. It's about them coming back for more, showing that aggressive behavior that whether they're protecting against a squeeze or they're playing, just some upside on the long side, they're stressing urgency. They're concerned about it. When you see one order come in, it could mean anything during earnings season. All right, so that's where earnings can present a problem. And, you add that into everything I just mentioned to you before I got into the earnings situation. There's a reason why, I want to take the approach I take. So what could go wrong, right? This is what everybody worries about. What could go wrong with the approach I'm taking? Well, what could go wrong is, I'm buying on dips when there's sweeper activity, and I'm locking some profit into the squeezes, and the market continues higher without me involved in a big way. But I'm willing to take that risk, because for me, looking at sentiment on a risk reward basis up here, for this market to just run away from me and not give me another opportunity of weakness to get in, the odds of that of happening aren't as high as they were the first half of this rally. So I can't let that bother me. What would bother me more is if I, let's say, didn't buy off a pull, or I didn't lock in some decent profit when I had it, and the market pulls and I get caught. So that's what I'm trying to avoid right now. All right. And like I said, it's a good thing if this market takes a breather here and sets up. Okay, because we really don't know. All right, we really don't know how deep this pullback weight may be, if it even happens. How long this pullback may be. Do we chop around? Do rates head down even lower, screaming for a Fed rate cut, and the market really start to heat up to the downside? We have no idea. We have no idea. But that's why we got to have, some sort of plan, and just understand right now is not the ideal spot to get aggressive in any way. Does anybody have any questions as far as unsure about what I'm trying to get at here, or unsure about how it may relate to you? So that's basically, you're looking to be more tactical here. That's all. And it's different than the conversations we're used to having, right? Like early on in the rally, we wanted to see decent action 3-4 months out, right? we wanted to maybe possibly give a leash to a name like ZS, which I didn't even buy because I'm a moron. You know, we wanted that. Now I think it's a little different where, you know, we want to put the trader cap on. You know, we want to actually trade. And the only way I know how to do that, and the only way I've ever had success in my career is by how I just explained to you, looking to buy weakness and playing for that snapback when my signals are there. Make sense? All right, so now we can get into, and by the way, I see a good question out there. When does that resolve is something we're going to learn more and more about each and every day. Again, we're not in the business of trying to make forecasts 3 months out. Okay? There's no money in the forecasting game here. It's a losing proposition. You get right, you're right, you get lucky. That's even worse next time around. All right, but what we're going to learn eventually is, you know, what will it take? What kind of pullback or how long of a consolidation will it take to wash out a good number of bulls that got involved along the way here? That's basically what it comes down to in my eyes. All right, and it was the total opposite, if you remember what we were talking about here, okay? If you remember, again, it seems like so long ago, but when we had short-term, intermediate-term, long-term, all sentiment signals align extreme bearishness, okay? It was pretty obvious into this, all right? If you remember, we spoke about no matter how bearish things may be out there, right? From my experience of watching sentiment is that there will be at least something to wash out a majority of those bears that were overextended into the lows. Remember us talking about that? So even if we were in a full-fledged bear market, there would be at least some sort of rally, some sort of lift that would take all that sentiment stuff we look at from extreme bearishness to at least back to neutral, at the least. All right, and that's the way to look at it here, okay? That's the way to look at it here. I think what we need to do is we need to at least have a decent enough breather here to knock down some of that intermediate term sentiment to neutral. And that's not a lot. That doesn't take much. Yeah, we're talking about intermediate sentiment being hot, Jay. That's basically what I'm referring to here. Again, because the short-term stuff, you're going to get hot off any little push, right? We know that, and that can cool off so quickly. So you don't focus too much or concern too much about that. Like, I'll give an example. We were too hot into the recent highs, right? And or Friday sell off into yesterday, the squeezometer was in the low 30s. All the other short-term stuff was right there. So it didn't take much, obviously. So the short-term stuff you don't get too worried about. That washes out like that. The intermediate term stuff is what can present a problem. That's where it can really catch bulls or bears hardcore if it wants to. And like I said, if you get that extension like we did back in January through hot intermediate term sentiment, the pull that comes after that is only going to be that much more vicious. Because think about it. Think about the reading I just gave you on the NDSI. Okay, the NASDAQ daily sentiment had a 95% bulls reading. 95% of the players are bullish. Okay, so if this market, and by the way, it's cooled off a couple notches, just off a little pullback here. Okay, not a whole lot, but cooled off from the 95. I think it's like 85 or something like that now. But if the market continues higher, okay, and people start ignoring that, let's say, that's just more bulls getting caught in here. Okay, do you think 100% of the players out there are all going to be bullish and they're all going to catch some major move in the market and all high five and make money along the way? That doesn't happen, right? That's the whole Bitcoin top. That's basically what happened in Bitcoin. All right, so that's the point I'm trying to make. But I will say this, the good thing, and you guys see this, and you guys commented on it constantly, sentiment moves so damn fast compared to, what I'm used to seeing it move. And there are reasons for it. Look what's going on in the world. All right, look what just happened now. Like, think about what just happened. We went from rates are starting to move higher. Remember that talk? 3%. Oh my God, rates are climbing higher. Okay, to now the Fed can't hike anymore. Now we're at where the market wants that Fed rate hike back from December. Okay, now there's a 50%, I think it's higher than 50% probability the Fed's going to cut rates. Cut rates in September. All right, which, in my opinion, that's another whole big concern, okay? Because let me tell you something. We were talking about this in the room. What the market wants, the market gets. We just saw that, right? With Powell, from where he was here to where he is now, it's like a different person, okay? So if this market wants that rate cut, what do you think this market's going to do to get that rate cut? You think the Fed is just going to cut rates while the market's moving higher? That's not happening. So if this market's stuck on getting that rate cut back, MJ, watch your mouth. You got a dirty mind, MJ. Yeah. If the market really wants that rate cut back, it's going to force the Fed into doing it. Okay, that doesn't mean necessarily, well, a lot of times it does mean the market comes in, but it doesn't have to crash. You know what I mean? There could be, we see it now, there's already that fear, right, of the inverted curve and all that stuff. So we can get chop, weakness, a little bit of a pull, some bad data, bad news, rates continue lower, and force the Fed into something like that. That's very possible. But I don't want to get all macro here. You know what I mean? I'm just trying to make the point of how quick things change. All right. So even though intermediate sentiment, we're coming out of it being a little too hot, it doesn't take much. It doesn't take much. Okay. It can happen boom, boom, boom with some news, and you got where you want to be and wash out. And I guarantee you, you're not going to have 95% bulls when the market's calling for a rate cut. It's not going to happen. All right, it'd be a perfect excuse to wash them out. So just things to keep in the back of your head. But the most important thing, is you're going to get bullish. You're going to feel bullish on days like today. All right. You got to stick to your playbook. Okay. Market starts to come in. Things start to weaken. You're going to hear the bears get rowdy. Things are going to feel bearish to you. Just try not to get reeled in. You have an idea of what you're looking for ahead of time. You have a playbook. You have a game plan. You stick to the process, and everything should turn out okay. Yeah, and well, Trump is already pissed. You know that, right? He wants that cut back, that hike back from December. But you could see it. You could see it already. You see it in the Fed funds futures. You see it already that the market already is starting to give hints that it may want that hike back. It's starting to give hints. But listen, I didn't even want to bring that up because I know some of you out there are already thinking short. All right. And the problem with that is they rarely make it easy. They rarely make it easy, especially when you're trying to catch it up here. You know what I mean? When you're trying to catch it up here, they rarely make it easy. All right. And again, I want you to understand intermediate term sentiment doesn't mean that this market, that's it, can't go higher than this point. Okay, think about it as a low, the way I look at it, like a low ceiling. All right. So in other words, tomorrow, if we pop here, there's a higher probability of sellers into that pop than if intermediate term sentiment was below neutral like it was throughout this rally. That's the difference. I know, MJ. I know. MJ's like, I'm going to get the bears excited no matter what. But, and listen, I think you guys are going to have more opportunity on an intraday time frame. I really do. Cleaner opportunities. Like if you were trying to short throughout this whole thing here with sentiment against you, you need your head examined. Okay. Now, into any push, I think you're going to have some sellers on your side. I don't think you're going to see the buyers that we saw prior come in. That's the difference. So you can be a little more tactical about it on a day like today, which I saw a lot of you guys did well. A day like today where this market just continued to drip lower, you definitely had some fade opportunities there, right? What's up, Tim? I'm getting you excited. Oh, you like my Madden drawings? All right, but makes sense. Anybody new on this webinar that has no idea what I'm talking about? You guys all know what I'm talking about here, right? PFD, I know you know what I'm talking about. All right, and again, the same thing, okay? I'm going to gas some of you bulls up, especially you newer traders out there who may get discouraged when you hear shit like this, okay? It's a good thing if we do get into something like that, okay? Into some sort of breather. Even if it's on a shorter time frame, even if it's for a couple of weeks, a month, what that means is, okay, you be a little more prudent. You're a little more conservative now. Maybe you're missing on a little upside to not get caught on a pull, okay? But ultimately, if you do get that, and when you do get that initial sweeper activity that comes out of it is gold. And that's where, even if you're early, okay, buying into a pull or consolidation, if you start to see some solid initial sweeper activity 4 or 5 months out, you could start looking at these new names, new ideas, and that's where you catch the big moves if you're into that sort of thing. Easier said than done, sitting in them and not taking profits, especially in options, but all right. And on another front too, because I throw the lingo around just in case you don't know what I'm talking about, stuff where you might not need the market as much, that let's say is not earnings related. Again, I got one example for you. I wish I could give you more than one, but I'm just giving you the example. Like a service monkey, okay? Catches action. It really is not market dependent, right? Yeah, it may not run if the market's getting crushed, but if the market's choppy and not doing anything, this thing really, it doesn't matter to a name like this, So it's an under the radar name catching aggressive activity, that, you know, more action, hopefully that's not tied to earnings, that would be another spot where you can look to stay a little looser. But everything else, like a couple of you guys had questions on like JD today. Okay. JD looks okay to me, right? You had the niner, you got a breather here, which sets up a new entry. You got some action coming in, but the problem is it's not initial activity, and you got earnings coming up in May. You know, so that type of activity is prone to failure. You see it constantly. It's not clean action. It's not clean buying. What else? And throw some names at me. Anybody else looking at any names right now? You know, and it's almost, I do it to a fault, but like, let's say on a green day like today, I have no interest in any name. But on a red day, coming off like a Friday, right? Monday, I'll keep my eyes open for any name catching action. Yeah, see, like Moon, and I hear you on this. Like, this is a little tough for me here. I know a couple of you guys like this thing. You know what's funny? And I'm not taking shots on anybody out there, but when this thing got lit up, I could count on 3 fingers how many people were interested in the sweeper activity in this thing. Nobody gave 2 shits, excuse my French, about this thing. And now up here, you know, we see a little bit of action and everybody loves it now. So yeah, you're off a little pull. You want to buy it for some sort of little snapback? My opinion, Moon, there's better stuff out there for that. You know, this stuff was tough to buy down here the way she moves. I mean, give you an example. Every one of us that ended up swing trading this name off the action all got out Moon before this point here. How about that? That's how annoying this thing could be. You know? So a name like this, you know, again, unless you feel comfortable about catching a snapback and a slow mover like this, I would look for something that can move, that catches sweeper activity off weakness for a play like that. I'd rather have that. The Alcoa, you got earnings here now. Again, setup's not bad down here, but here's your earnings. April 17th. So, and here's the thing, Alcoa could catch a missile tomorrow. Could catch a missile. And I still wouldn't play it. No, I still wouldn't play it. The way I would play it, I would keep an eye off any earnings weakness for additional buying. But yeah, this is too close for me. Alcoa, you need all the room you can get to try to catch a half decent move. Unless you're looking to flip it, Moon, I don't have much of an interest in it. Another thing we could keep an eye on is, as usual, the earnings weakness, right? You like a name that you missed on the way up, and they hit her after earnings. Look for sweeper activity. But again, I wouldn't get too comfortable in that for a trade. My opinion. Anybody else have any names? Maybe that Sage. I don't know. Did we see any name that's a biotech, right? Oof, that's had a nice move too. That's had a nice move. I don't know if we saw any action there, but I know this name catches action from time to time. CTXS, there's a good example. Nice spot, some action today, right, Tim? Here's your earnings right here. So again, right, you're looking for a trade there, and you should be playing something before that expires before April 26th. Otherwise, you're playing earnings. This is a perfect example of what I was referring to throughout this webinar. Right? This is ideal. Love the spot. You see action here, right? You're looking for something like this. April monthlies, right? April monthlies will you could play before earnings, exactly. So yeah, for a trade, for something like this, maybe get some of that move before earnings. She was green today. I think she was green, right? So I'd probably wait to buy red personally, even though it's down here, but that's not that big of a deal. SGNN, yeah, that caught a one of the few half decent bets today, right? Wasn't this thing a lot cheaper, Ani? Or am I thinking about a different symbol? Wasn't this stock so much cheaper? Couldn't have been that long ago. Probably a different one, right? Yeah, I don't know much. Oh, this is a Baker Brothers play, huh? Interesting. I'll take a little deeper look into the action today, and I'll post something on Twitter. Do they have FDA approval on it? You know that stuff. Anything like that on the horizon? Yeah, check that out. Let me know, and I'll take a look at the flow. I know it caught a half decent order, especially on a day like today. Sticks out even more. Yeah, Bill, I was looking at this name yesterday, MITK. This is software in the software group. They do that banking stuff. I remember this stock when it was $5. This stock caught a little bit of action. Obviously, I'm not crazy about the spot here. Yeah, I would personally, I would wait at least for a little digestion here. What can happen? What can happen, Bill? If this market gets into like a choppy type environment, you can see something like this again. And it's known to do that. Our earnings, they had earnings right here. Yeah, they had earnings. I mean, again, that's me, Bill, more than anything else. You know what I mean? If it was a different, if we had sentiment on our side on an intermediate term basis, then you could look to buy any little pullback. But I don't know how much more upside market permitting. It depends. Just because she's run already, that's why. That's the problem. But yeah, I got it on my screen just in case we do have some sort of dip or consolidation and this thing goes into a little hibernation. All of these software names, especially the new ones, all the new names, there's BKI, FIVN. If we go into a little quiet mode, we can't forget about these things. We can't forget about these things. Because you saw how software came out. Remember all the underbelly plays recently that came out of the little poll. SGEN has phase 2 data, first quarter 19, so soon. Yeah. So that's what probably the order's about, Ani. That's what probably the order's about. Also competitive Merck data coming as well. Yeah, there wasn't too much action that got me excited today. You had the Zillow weekly sweep. I would keep an eye on it tomorrow. Like I said, you got home builder earnings, but maybe catch a day trade. Otherwise, I would like it a little bit more. All Baker Brothers closely, they're up like 4. Yeah, Baker Brothers, they've been ridiculous, right? Are they still in this one? INCY? This one caught a little action too recently again. The Baker Brothers still in this one? Oh, they are. Yep. Top buy last quarter, this one? Unbelievable. Because this thing got beat up pretty good. Yeah, look at this. Wow. Yeah, there was a little flow in this thing again. Catches flow from time to time. Yeah, so already some interesting names you guys got. What else? Remember they came for 2 summers ago? Yes, yes. Had a monster move, MJ. I do remember that. Yeah, this Incy can move too. Oh, Hexo. I saw you posting that, Jason. That's that weed play. Yeah, still looks okay. Still looks okay. Looks like it's just breathing out of this. Yeah, that little niner here, niner by here. So she could chop around here a little bit. Oh, again, guys, my concern about any of this stuff is you may have to sit in it to catch the larger move, and obviously there's more market risk with that. That's the problem. That's the only problem. Like these weed stocks have been holding up solid, but if Momo comes out of them, they're due for a breather. Some of them still look okay. 17%. What's that? The short flow, Gary, or INCY. So SGEN is 20%, 24% of their portfolio. The Baker Brothers. Twilio, again, trading vehicle. I think it's going to be a little tougher to trade, I think, because of the move already. So you can see what it's doing now, right? But this is a great short-term, extreme short-term type thingy. So you see you got this going on here. And that's my worry. Again, not to beat a dead horse here. Let's say you're buying Twilio, right? Yeah, Tim, the way you played it was perfect. There was a sweeper yesterday, and you flip it today. That's the extent of it. But here's an example. Let's say even you buy Twilio off weakness, it catches a sweep, okay? And you don't sell the pop, and you're sitting through this, right? You're feeling okay. It's grinding higher. When that pull comes, whoop. So how long, that's what you're weighing. How long will this thing grind before this pull comes? And is it worth it? It comes. It came even when sentiment wasn't as hot. They constantly shake out bulls in this thing. Look at this. Right? Like this is even earlier on in the rally. So like that, just an example. You buy this dip, okay? You got a nice little pop there. You're not taking it, and then this comes. The problem is, this sentiment wasn't hot until recently here. Now you have sentiment hot where this can hang around out here a little bit and breathe. Like the ZS. I mean, what do you do with this here? They're going to run her into earnings? When's her earnings in this thing? I don't even know. She had earnings not too long ago. Yeah, these things had their fun. Shop. Tough. I really don't have an opinion we up here. Look at this. So at the least, you want to see a decent breather. At the least for a position in shop. So gets caught in something like this, right? Maybe a market environment we were just talking about, and then God forbid she catches a sweeper towards the end, whoop, of that breather. Like that's me personally what I would be looking for there. Otherwise, this thing, the money was made there. Yeah, Coop is cooling off a little bit. Let's see, because that thing was unconscious too. Yeah, see, getting a little tired. Not much of a pull. Just choppy, right? What a monster. But yeah, look, they have to breathe this out. The longer they go without breathing out a rally like that, the worse that breather is going to be. The worse it's going to be. So you're trying to dodge that. You got to get lucky. So yeah, let Coop, George, ideal scenario, let Coop breathe. Trade it if you want to, weakness, flip it into green, that sort of thing. But as far as a position, you want a decent sized breather there. You want them to cool off. You want them to definitely cool off. ABBV. This thing kind of got stuck here now, right? You got earnings end of April, but other than that, it looks like you could even squeeze out of here if they buy some biotech. I'm sure sweeper activity came out of here to change the momentum, but now she kind of got caught up here a little bit. Again, I wouldn't chase green. And me personally, this is where you see this down. You catch a sweeper there that you like, and then I would sell it right back into the range again. That's what the market is giving you right now. That's about it. Baidu. Whew, this thing didn't even rally at all, huh? I don't know, tough. What were you looking for? Just a trade out of it? I know you probably want to put a bullet in my head for saying the same thing over and over again. Yeah, I can't. Midterm is tough. I was just going to ask you that because you got earnings at the end of April. You got earnings at the end of April. So it's an earnings play. You know what I mean? Like Baidu, yesterday, Baidu caught a decent order too. I remember, right? Baidu caught a decent order yesterday. But it looks like, look at this. It gave back the whole, I saw it up in the morning. It gave it all back. So that's what that's what I'm referring to. Buying weakness and just selling a pop. You're gonna get some decent moves, some bigger than others. And if you buy weakness, at least you'll have a little bit of cushion, more than not, when the rally comes. But you can't chase rallies in these things. Thing, I didn't really pay attention. They all pulled back. I know Apple. By the way, Qualcomm, you got to dodge news there, but Qualcomm's been acting strong. It's extended now from where a lot of us were looking at it. But I know a couple of you guys got longer Qualcomm lower levels. Apple started selling off when we started to see some put action off the Qualcomm news. And you see like all these stocks that looked half decent, they all flash their third or fourth niners here for a breather. So they're all in breather mode, in my opinion. They're all in breather mode. I didn't see any of the other ones. Let me see. Amazon. And see these, for example, like these FANG names, if you do get a sell-off, they may support them. In other words, they'll likely buy these things up until at least Netflix reports and see how they come out, That's what they usually do. So if you get weakness and you get some sweeper activity there, they're worth a look for a trade. They're worth a look. But for more than that, it's a tough call. It's a tough call. Again, it can happen, obviously. I think the risk is just a lot higher now. When is this? This is the end of April. I mean, they could hold this up until April. And if they hold it up, you could buy dips and find trades there. Well, you see the name of the whole moral of the story here, right? Just be careful chasing green more than anything. That doesn't guarantee everything you trade is going to be a winner, obviously, but you at least have a fighting chance. Think about like buying today into that gap up today. You're talking to yourself off that fade, whether she comes back or not. You're talking to yourself. TTD, that's trade desk, right? Yeah. See? Why did you do that? Any reason? There was a put sweeper today, not a. Oh, I thought you meant call. Yeah, there was a put sweeper. Why did they do that, Tim? Any reason? 5 times? Wow. Yep. So that's the example. A couple examples, at least a couple examples, proving my point today, rather than making me look like a jackass. Because initially I look like a jackass on some of these overheated names. A lot of times, usually they keep pushing higher and get people to do sloppy things. But see, you got this grind, and then this just came out of nowhere like this. So now if you're in up here, even if you bought, let's say, a day of weakness and you were looking for the snapback, if you didn't get out of it, if you're in anything short dated, you're done now, right? I mean, barring a miracle. Barring a miracle, you're done. That's the problem. That's the problem. Yeah, it depends on where you are. I get it. I like sideways. It's almost like you're waiting for that bomb to go off, right? But I don't mind. I don't mind sideways and consolidation when I have sentiment on my side. But you bring up a good point. When sentiment's against you, you feel like that ceiling is going to come down on you. Like you live to fight another day. Each day goes sideways, and then boom, something like this happens. Yeah, right now, exactly. Right now, sitting sideways is not a good thing. Yeah, that's and Tim, that's the way you do it, and you do it well. Not everybody out there could be. Not everybody's in front of a screen, and not everybody could be as quick. So a lot of times the more prudent thing to do is to just not stick your neck out, not get involved. Wait for weakness, wait for an opportunity, and just trade. Just trade. Like right now, if I could only swing trade, okay, and let's say I couldn't be in front of the screen at all times and all that stuff, which a lot of you, I'm sure, face. I would wait for them to flush them, and that's where I would be looking for a spot. And anything aside from that, I just wouldn't. The FOMO wouldn't get to me. The FOMO bothers me when my signals line up and I miss a rally. That's when it gets to me. Like FOMO doesn't bother me because I'm afraid of the FOMO more than I'm envious of the FOMO. If that makes sense. What do I mean when I say don't buy into green? Oh no, what I mean is as simple as that. There's no. What I mean is you get a gap up like today. That's not where you want to find your entry. You want as simple as if they sell them tomorrow or the next day, I'd rather look for entries into that weakness than buying into the highs of the gap up today. You understand, MD? So that's what I'm saying. Just not trade. Don't chase green is what I'm getting at. Because I think we're going to see a lot of these, and we already are, reversals and fades. Yeah, not just gap ups, MJ. You know what I mean, but I'm trying to explain to MD just in general, right? Stocks up. Like today, there were so many names, that I could have day traded, but because they were just up, all bright green, it just wasn't worth it. It wasn't worth it. Because again, there was a higher probability of a fade than that rally extended, right? The rally could have extended, but the odds were against it. Yeah, today, right. And that's what we talk about constantly, MJ, right? Sometimes it frustrates you, right? Things are green and they get even more green. They go up even more. Okay? But more than not, if you avoid chasing green, especially when you don't have sentiment on your side, net you're going to be you're going to see the benefit to your P&L. Put it that way. But without a doubt, there's going to be stocks that are up $3 and continue higher. That's the market. No, there was a big block there today in that Avia. It was a big block. What they do? They caught a bid, right? Takeover or something like that. Yeah. Yeah, there was a big block there today. I didn't even check to see if it was tied. Because again, I'm having trouble pulling the trigger on any sweeps, let alone blocks here. Anybody else have any other names before we wrap it up? We'll keep it. What time is it? We'll keep it short today. 5:30. Well, it's not short. We're over an hour here. Twitter. That's an interesting one. It's kind of annoying just because there was a decent setup there. So what happened? You had Twitter literally here on this day catch a big sweep. Okay. Then on this day in the morning, they come in and they had that mad scramble for that, a lot of short dated calls. So they did that in AMD, Netflix, Facebook, Apple, if you remember that chase. So I thought Twitter was going to have one of those days, to be quite honest with you. And then the market fell apart that day. I don't know if you guys remember that. It still closed green, but well off the highs. And now she's just, caught a little more action today. I don't know. It's tough. Tough call for me, MJ. Same thing. I would just blanket statement for a lot of these things. Earnings are the end of April. I don't know. Just some of the latest action hasn't been into red. They didn't have much time. Yeah, sweeper. They sweep it into red. Twitter, but just since the big bet on this day, there hasn't been much red. This was the red day right here, and she was green initially. Other than that, what today went red? Did today go red? And it looks interesting because it's lagged this whole rally. So it can definitely hang in there, It can definitely hang in there. Yeah, it definitely looks choppy. But, choppy for this playbook could be good too. Because it gives you chances into weakness. So that's what I would look for if you're interested. I would look for some weakness, a pull. If you don't like it enough, wait for sweeper activity. If you like it already, that would be an entry. But it all comes down to, again, what are you looking for? Are you looking for a big move? you're not going to get it before earnings. You know what I mean? That's why take the big move and throw it out of the playbook right now. You understand? Take the big move and get it out of your repertoire of weapons. Because unless you're willing to ride out through earnings, you're not going to catch that big move. Yeah, so MJ, I think there are better options out there if you're looking for the quick flip, right? Why a Twitter? You know what I mean? Why Twitter? That thing is frustrating as all hell. Yeah, I guess. But you want something. You want some of these Fang names that are maybe set up well, or some weakness that you think can snap back, or even. What about the overall market? No, MJ, for what you're looking for. Oh yeah, no, you have to wait for the setup anyway, I think. Yeah. Again, it's just people look at this because here's the allure here. You say, oh man, this thing hasn't moved, has been one big spider web of chop, has been consolidating here nicely, okay, and well, maybe this thing catches some nice sweeper activity and you get that big breakout. That very well may be the case, but you got earnings there. So listen, it could be part of your plan. Then you don't care what it does until earnings because it means nothing. But that's an earnings play. There's nothing, this is an earnings play to try to catch that big move. Aside from that, the playbook, like with most others, you get a dip, that would be your entry, and you're looking to sell it when it snaps back into this range here. Yeah, Twitter, there was, you had that big missile. That was here. That was on that day. That big missile. Remember that missile? And you had that frenzy of spec sweepers off the open on this day. And she actually took off. She just gave back the gains with the market. She took off that day. And, right now it's just been sitting in the middle of that. Why? You look at the market hasn't done anything spectacular either. It's in the same shit. Same thing. Up, down, right in the middle. So that's the tough part here. There was a bullish report on ADV on Twitter that lit it up a few days ago. Bullish report. What do you mean, from an analyst? Yeah, I don't remember anything like that, but I take. Oh, ADV research firm. I got you. Yeah, MJ, I gotta run too. All right, everybody. So just keep it simple here. Be smart, nice and easy. Consolidation would be a good thing. All right, set some things up. Trey, enjoy your little vacation over there, huh? It's a good time for it anyway. All right, and we'll see how the week plays out. Also, we got, by the way, not to sound like professional CNBC member here, but you got end of the quarter, end of the month, end of the quarter positioning here. That's only going to add some more chop and mess flow-wise and price-wise, action-wise this week. All right, so don't get too hung up out there. Be a little more selective. It's probably worth it. All right, I'll see most of you tomorrow. The rest of you, I'll see you next week on the Tuesday. Good luck out there, everybody.